Hello guys, glad to have you on board again. Today we're going to take care of the second part of the correction for the MCQ test. The first part has been done quite a while ago and we really had to do the second part at some point. I'm sorry for this extended delay to get this done. So we're going to take care of this right now. So we already took care of question 1 to 10, so we start at question 11 today. The second part of this MCQ test was about giving you signals. So actually the context was a little bit different in here in terms of the question's expectation. The first 10 question was most likely trying to test you out of the hardest part of the strategy, identifying the context. I was actually positively surprised about most of the answers, and just as a reminder, the conclusions we got down to was most likely that when it comes to identifying context, and most likely tricky context, you are definitely much better doing it without the prices. So once again, I strongly invite every beginners among you guys to really delete the price. If you have any problem or any doubt identifying a context, then generally deleting the goddamn prices will give you a much better information to review. Before we actually get this done, I'm going to show you how to delete prices. Because some of you guys may not know about that. So first of all, I give you a template. You know, it's a pro-indicated template. I think it's this one, all right? So I give you the link generally when I send you the welcome message when you subscribe to the indicators. I give you the link to this chart, so you can simply copy it, and normally you should have access to this hollow candle pre-built in. Otherwise, if not, then it's really simple to do this. The way you're going to do this is you're going to use multiple stuff, like you can use the line candles and hollow candle and set them as favorites so you can easily switch between them. And the thing is that you're going to use normal candles as normal candles, all right? You just choose the colors, whatever the fuck you want. It's really up to your own customizations. But what you're going to do is that you're going to use hollow candles on top of that. And basically what you are going to do with the hollow candles, they're basically there. It's just I turn them invisible. So the way you're going to do this is, oh shit. All right, that's new. They just changed the template. That's interesting. Status line. What the fuck is that? All right. Okay. All right. I'm going to have to have a quick overview of this. Appearance, vertical lines, gate lines, watermark, crosshair. Basically nothing new. It's just more about, okay, connecting lines, executions. No, where showed it. Wow, nothing new actually. They just changed. So anyway, the way you're going to do is that, so this is new, but this is how you're going to do it. You're just going to go there and turn every fucking thing to opacity at 0%. It's simple as that. You take the hollow candles and you just turn them entirely opaque. You do absolutely 0% opacity. And by doing this, simply the candle will disappear. And that's done. And now you can simply switch between normal candles and you'll see the candles, or hollow candles, you'll see invisible candles. That's exactly how you're going to do this. It's pretty fucking simple. And once again, struggling, identifying context or anything like that, just delete the goddamn prices. It's always going to be easier. Anyway. Back to the major topic, and I'll try to make this one a little bit quicker than the French guys because it took me an hour, and to be honest, I really have a stuffy nose at the moment, so I'm doing any fucking thing I can to be able to speak understandably. So, like we said, the difference in here is that instead of asking you for a context, I'm asking you a simple question. Is the signals you have at the moment on the current candles interesting or not? That's the first question. And then, are you going to take this signal, yes or not? And the question has multiple answers, meaning that yes isn't just a black or white answer. It isn't you take the trade or you don't take the trade. It's never like that. can be yes, but for specific peoples, like yes for everyone, it's a pure trade, low risk trade, everybody should take it, or no, only experienced traders should take it because some conditions are not necessarily all being met, so it requires a little bit of expertise, or yes, but only for professionals because we're trading dangerous contexts like bubbles, extended trends, or stuff like that. Or counter trend trades, just things that only professionals, guys who have mastered the strategies, at least most of the strategies rules, and been using it for quite some time, then only those guys can get to those dangerous contexts. They're definitely the ones that brings the biggest gains. I've always been clear with that. But if you try to cross the steps and go faster than you should, then you're just gonna traumatize your fucking self, and that's not how it works. You need to take some time to get there. Be aware that it takes years, and if you want to be trading like a professional as you just got in for a year, then it's definitely not gonna work. So when it comes to no, I'm going to give you multiple choices as well. There's the first one. No is just noise. I mean, you don't even know what the fuck to do with this. You cannot even identify a simple context or anything like that, so you just move the fuck away. It's not interesting at all. Or yes, it still shows some interest, but you need more information, meaning that there is some way of risk limitation, but you need additional signals. So either better signals or you need to wait for further informations. But it is interesting to watch out for these charts in this specific time frame. And the final two answers are no, but still that would be interesting to have a look at the lower time frame. So to have a more precise vision, a more aggressive approach on this kind of signal, or no, but I need to have a look at the higher time frame, which means the time frame you're looking at is a little bit too aggressive, but there's probably something else to do out of this market, but probably in a broader picture perspective. All right? So let's put that in perspective and start it all over again. So you're always going to follow the same process. That's the process I ask you to follow when you have a look at the chart, whether you know the asset or not. You're going to follow the same plan. Like, once again, now you should be able to identify context, filter prices, trigger a trading signal, and risk manage regarding how aggressive the signal is. All right, so normally you should be doing this. In these questions, we're going to sum all those informations at once. But, like you know, the strategy is step one, you identify the context. Step two, you make sure you feel the price filtering conditions for a low-risk trade. And then, and only then, you wait for a signal. And depending on how aggressive the signal is, you're going to use different money management, aggressive management, tight position sizing, normal position sizing, tight stop loss, or a less aggressive approach, a larger stop loss, and tighter position sizing, stuff like that. All right? You're going to adjust how much you expose your capital to this trade and how much room you leave for prices to work around the area. But what we do in here is pure and simple. I give you a chart, and the first question that you should answer in less than 15 seconds, is this worth the analysis or not? That's the goal of this thing in here, because you're going to have a look at so many charts, and sometimes you're going to spend a shit ton of time analyzing something that doesn't even matter. So this is why I've been putting some pre-working algorithms in those indicators to assist you to avoid overtrading, which means spending some time into stuff that doesn't even matter. So the thing is, those algorithms in here are here to pre-work for you. They are going to show if something is interesting or not. If nothing, then you just move the fuck out of here. It's simple as that. If it shows some interest, then this is where you start the analysis. Step 1, 2, and 3 in a row. All right? So, same old process that you're always going to follow when you are fronted for charts that you just discovered, and you need to figure out if it is interesting or not. All you care is not this area of the chart. No, not now. This is what you're going to take care of only if you figure out this is interesting. So, how do you answer this simple question, interesting or not? You have a look at just this. Just what's in the margin, all right? Just what's in the margin, and the latest 5 bars is where your attention should be focused on. The rest doesn't matter yet. It will eventually later on. So, first informations, you review the signals, all right? We've got a price okay, it's good. We've got a context, we've got a momentum okay, sine wave okay, and we just had an exit signal. We also have a blue triangle. These are the informations we have so far, All right, that's great. These are the late stages information. Does that sound interesting to you or not? Just ask yourself this question. To me, it is. Like I told you in the PDF manual, when you have a price OK and a momentum and sine wave OK, it means something is interesting in there. So you need to go ahead with a fully analysis of the actual using strategy. First step, context identification. So how do you do this? You go straight ahead to look at the context boxes. How do they work? And what kind of context does this relate to? So in here, it's pretty fucking simple. We've got unfolded boxes both on support and resistance context. So just those two information sets the actual answer. Yes, first question, it is interesting to look forward, but still we can't go any further than step 1 in here. We stopped by the context. We're in a dangerous context, meaning emotional context or trending context. But still, if it is a trend, then it's way too late. It's already been broken out, so there's nothing you can do with it. It's only for a professional at that stage, experienced trader eventually, but still I would recommend to wait for pros. And having a pro to oversight any activity you could do in here because it is not for beginners. All right? So the actual good answer in here stops in there. The process is, it's interesting, but we can't do anything else but for professional traders in here. So it would be, yes, there is a signal. Probably the pros will take it. So this is a good answer. This one is acceptable some way, even though I think only the good ones can do this. If you are just 1 year trading, I don't think you have it enough. You have seen enough to face that kind of context. No, it's not noise. All right, it's definitely something. It is a trend. It is interesting, but you need more information. I can accept that. It's just that you may haven't figured out all of what I got down to, but still, that's not a wrong answer. You need to have a look at the lower time frame. I don't really understand why you would answer that, because going to the lowest time frame is going to bring a more aggressive signal. So we're already very aggressive in here, so there's no need to be more than that. Having a look at the higher time frame, definitely a good answer as well. You've got the context alert, meaning that anyway, if you do want to trade that, you need to have a look at the broader picture. So having a look at the higher time frame, definitely a good answer in there. So what have you guys gave as an answer? You said for 32%, yes, but only for pros because it's a dangerous context, and you definitely caught it right. That's exactly the best answer to me. But what concerns me is that 24% of you guys have been saying, yes, it is a low-risk trade for everyone. It kind of is, but still, it is a counter-trendy trade because this definitely is a trend. And like we said, we have unfolded boxes. So we've already been broken up, and the trade we actually have here is a buying signal, right, in a bearish trend. So this is a counter-trend trade, which you shouldn't be doing when you're beginning. You don't do counter-trade trades. What you're doing here is you're going to look on the gains because if we had to go all the way down through the analysis, let's do it, all right? This is what we have. This is where we've got the accumulation, prices working around the trend channel before breaking in, all right? It's not the usual type of accumulation, but still it is one. We've got the breakout cross in here, all right? And the market falling through both context channel and trend channel. So this is a trend breakout. Then we start seeing some other breakouts, range signals, bearish range signals, but still signals. All right, so it suggests we're kind of losing steam. So what could be the next step? Right after breakout, we're waiting for a goddamn divergence. So this is where I think we got to the divergence signal. So which context are we trading right now? The divergence step of a trend, which means the trend is not yet over. We're still trending, though buying in here is kind of trendy. All you can do in here is just probably partial profit taking. If you've been selling this trend, then this is about time to lock on some gains, 25%, 50%, depending on your risk assessment. All right? You've got a signal, so yes, there is definitely a trade to take in here, but not a trade entry, more likely a profit taking for bears. All right? Some very aggressive professional traders like me may eventually try to take the counter-trend trade to profit from the divergence to pullback trade, but that's all. And only professionals will take care of this because this is hardly counter-trendy. All right? So I would say those who said low risk trade for everyone, I don't agree with that. Beginners should never ever get their hands down here, despite profit taking. And if that's what you think, if that's what you were thinking about back then when you answered, then I totally agree with that. Another 25% have been saying have a look at the higher time frame, and those two pro onlys and having a look at the only higher time frames are definitely the two best answers to me in here. So I'm pretty glad with the answers you gave in here. So I would say yes, but only for pros. That will be my answer, but as like I said, most of you guys gave a good one. Let's apply these same rules in here. So first of all, we review the signals. We've got a price OK, and that's pretty much it. We've got a blue triangle and a sine wave target, but this is a cross target. Remember that those targets, you don't know what they mean. They can be range breakouts, they can be trend breakouts. You need to figure out what the fuck has happened in here. So what is this? We can hardly know if this is a range target or a trend target because the prices have been rejecting multiple times throughout the context, the trend channel. So this could be an accumulation heading toward a breakout. But still, this feels like it's bullish, and this could just be the final breakout in a range to just go searching for the resistant context. So in here, this breakout, hardly going to be a reliable information, so at least it's a balanced information. So all we have is a price OK and a goddamn triangle. We're trading at a Fibonacci retracement, which is the 38% Fibonacci retracement, but still, that's all we've got. Absolutely no signals in there. So, is this an interesting chart to trade? The answer is definitely no. No way. You can't go any further than that. Going on further analysis, trying to figure out the context, it's just a waste of your time. So, in here, you just get the fuck out. The answer is pure and simply, you don't give a shit. I accept multiple answers because in here, having a look at the lower time frame could be a good answer, all right? Having a look at the higher time frame definitely could be, but I don't nearly think it's interesting though. These are acceptable answers, but what I would say in here is just anyway, the answer must be no. You move the fuck out of here, right? The only thing we could trade is if this was a trend, but it doesn't fit a trend plan, and this would be a pullback, but I'll say no way. To me, there's nothing to do in here. So no, it's just noise, or there's nothing to do here. Having a look at different time frames if you think it is interesting, or more information. I would say all those answers are pretty good. All right, that's pretty much most of what you said. As I got more than approximately 75% of no answers out of those four. So in here, you've done a pretty good job as well. So my answer will be I need more information. As an aggressive professional trader that could eventually trade this 38% Fibonacci retracement, but I require at least a signal, which means in here I got nothing to do. Question number 13. Exact same stuff. We repeat the same old routine. You don't have a look at what happens here. Just focus your attention in there. Price okay, momentum okay, but no sine wave okay. We've got an exit and a blue triangle. We're trading at a 61% Fibonacci retracement. All right, these are all the late stages informations we have. Does that sound interesting? I would say yes. It's a partial signal because sine wave is still lacking in here. We can see the trend sine wave in here being somehow interesting, though. It's in the early stages of a bullish cycle. So I would say sine wave probably has been okay a few bars ago, but as it's been taking too long to trigger this triangle, it's probably too late for sine wave to give an okay. But I would say, in a cyclical perspective, it is not bad in here. So we do have a signal. The second question is, what do we do with it? So we go back to step one and we go further analysis. This type of trade just basically worth the analysis. So, first step, what the fuck do we face? Probably is going to be a range, let's confirm that. First range boundary, second, third, I can consider this as being one. This one, okay, multiple attempt, but you just count the big boundaries when we've got context to context, all right? So in here, we're building this. So it's 1, 2, 3, 4, 5, 6 boundary on this range. So it is a mature range. You cannot even trade if you're a beginner. Remember, beginners can trade up to 3 contexts in a range. 4 and more is too dangerous for beginners, so only experienced traders will take care of this. That's it, all right? But still, let's say you're an experienced trader, you want to get down this road. What makes it possible to pass filter 2, step 2, which is price filtering? So remember that in a range, you've got two types of range, the trending ranges and the normal range, the natural ranges. Natural ranges require 76% Fibonacci retracement, so this would be there. So if you figure out this to be a neutral range, then you can't trade this because you need for price to get there. But let's say in a broader picture you figure out this range to be a bullish range, then in that perspective you can trade 61% Fibonacci retracement and price in context. In that configuration, in here a trade will be possible. A bullish range trade, but it requires you to have a broader picture of this market and making sure that there is still some bullish potential that you can target, all right, and that you can risk manage and stuff like that. All right, so I would say in here, in a bullish trend, in a bullish range context, which is once again locked down for beginners, beginners cannot trade trending ranges, they only trade neutral ranges. So beginners in here, there's nothing you can do. All right, the range is too mature, so you can't pass the filter context, and you cannot even pass the price filtering. So in here, if there is a trade, it's always going to be for professionals or experienced traders only, and in a trending range context. All right? So I would say in here, the answer is yes, there is a trade to do, but it's only for pros or experienced traders, and that will be my answer. What did you guys give me on this one? 38% in answers, which is largely the most answered one for this exact same answer. So I'm glad, guys, you're really good at it. So it's definitely yes. Some others, and this is a little bit more of a concern, 30 and a little bit more percent of you have said it's a low risk trade for everyone, and it isn't, because you cannot check the context box, the context step for beginners. That doesn't fit the plan. Beginners cannot trade that kind of context. It's a mature range, you cannot go ahead. So this is a bad answer, and more than 30% of you have been giving this answer, so I hope you really learned from your mistakes. Please don't make it again. When you have a mature range, if you're a beginner, you just pass on this. You wait for accumulations and breakouts, but you wait. You cannot take those trades. Question number 14. Same old stuff. I'm trying to do this one a little bit quicker because my nose is really starting to trade me. So context, momentum, okay, divergence, and overload. So we've got both a bull and a bear signal in here. That's pretty much complex. And that's all we've got to deal with. So no sine wave, okay, just a momentum and conflicted signal plus a context alert. Oh man, that should be really, really answering the question all by itself. Is this chart interesting? No fucking way. There's no consensus about the technical informations you've got. Both bulls informations, both bearish informations. You don't have a consensus on the indicator. You don't even have a price okay. What you have is a context alert. So what do you do with it? To me, the answer is clearly you get the fuck out of here and you have a look at the higher time frame. There's no need to go even further in the analysis in here. It probably is interesting, but first, have a look at the higher time frame. The informations will probably will be a lot more reliable and a lot less risky. What did you give? Yes, for 40% of you, the large majority of you guys have been giving me the right answer in here, and other answers are pretty much acceptable. So good answers for question 14. You got it figured out. Let's play the game once again in here. Context alert, price okay, sine wave is okay, but we've got no momentum as there is a fucking squeeze. We recently had a taking profit pattern. All right, so all those informations, as you can see, lots of alerts, squeezing alert, context alert, so it should ring a bell. This must be interesting some way, but not for a trade. So this chart has some interest because the squeeze says something will happen in here, but first of all, not on this time frame. Remember that when you've got the squeezing alert, you cannot even trade. The only thing you can do is breakout trade of this out of those squeezes. So is there a trade to make out of this time frame? Definitely not. As we can see, we're trading exactly at 76% Fibonacci retracement. So that should still ring a bell. We also have a red triangle. So pretty much some bearish information is coming along the way, but still on this time frame, those signals are way too aggressive. Nothing you should get your hands down to, or I would say yes, but only for professionals. So anyway, everyone in here, even experienced traders, the actual information you should be processing out of this kind of charts is get the fuck out of here and have a look at the higher time frame as well. All right? There's definitely something interesting in here, but you need to be less aggressive. You need to have a look at a broader picture in which you'll be able to figure out what the fuck is this? Is this a range? Is this a trend? Is this a whatever? You'll have better information, more reliable information, and less aggressive signals on the higher time frame. So in here, we move on. It's simple. We have a look at the higher time frame. Question 15, your answers is 16% have said yes, but only for pros. I would agree with that. As a professional trader, I'll probably take this trade, very aggressive trade, but I'll have to wait for the squeeze to be done to the downside. And at least that's a good answer, which means you figure out that it's going to be very aggressive and only experienced traders can do this. All right, so you had some visit in the meantime. So I think we figured it out about this one. I don't even remember anyway. The answer is clearly this. Have a look at the higher time frame. Way too risky in there, even for me. Question number 16. Let me bring the answers first. Question number 16. So let's do the same old job. All right, we figure out the actual reliable short-term information, trying to figure out if this is interesting or not. This is what we have, all right? So momentum okay, sine wave okay out of a divergence signal. Remember that the red signal like that are the one you want to see into trending contexts. So this kind of hidden divergence, you want to see this in a trending context. And definitely this is what we have in here, but we'll figure this out right after. We have no price okay. We can definitely see this. We'll note this range signal, which could be interesting. And that's pretty much it. So what do we have in here in terms of information? Yes, this could be interesting, but only if you can clearly figure out this context to be a trend. So we get to analyze this. First step, what current context are we trading on? It is definitely a trend. We can clearly see that we've been accumulating in here throughout the trend channel, range signals, stuff like that. Normally the accumulation set itself on the support context and then breakthrough. In here we just made a very aggressive accumulation, but still you can see multiple comes and goes throughout the trend channel before the actual breakout signal, throughout the context channel and the trend channel. So this is definitely the breakout area of this trend. We can see the price going freakingly low, breaking through context. You can see in here both contexts are even unfolding on each other, so it is very aggressive breakout. You see this trend another breakout, probably suggesting late stage breakouts, so more likely where you want to secure the trade, where you'll figure out probably the divergence. All right, remember that the trends rarely break multiple times in a row. All right. We started to have early trend arranging signals in there, in here, all right, and in here. So yes, we're definitely passed through the divergence step. So we made accumulation, breakout. So look out for the divergence. We can clearly see in here where we've got the exit signal. All right, remember that's the signal we traded earlier. So it's exactly this. This is where we got the divergent signal, where the bears are profit taking, locking on the gains at the divergence, where counter trend traders and experienced or professionals only will try to counter trendy trade for the pullback. So what are we doing right now? We do have range signals. We're trading close to 50% context, this red line in here. All right. We do have trend reactivation signals. We're definitely trading a pullback context in here. So are we in a trending context? Yes. What stage of this trend are we currently into? The pullback. So there is still a little bit more room to the downside to expect. It is not going to be the crazy end of the world kind of move, more likely just a bearish extension to slightly new lows where you terminate this trend, entirely profit take, and start building the range. All right? So that's exactly it. It's no more than that. So can we take this trade? The answer is Yes, still a little bit of informations are lacking. You don't have the price, okay. You normally supposed to wait for a red triangle, which you don't have yet. So what do we do with it? We've got a partial signal suggesting an entire signal is probably along the way, but it is definitely interesting to watch out for this trade, put an alert or stuff like that, and to watch out for this. We're trading close to 23% Fibonacci. The next level is 38.2. So these are the areas you're going to have a close look at prices. Either we're reversing here and we're just going to reject 23%, or we're going to get to 38.2, and this is the next area of interest for you to try looking out for a potential trade. You already have momentum pretty much okay. All you need is a price reactivation. All right? So in here, the actual answers are yes for experienced traders or professional traders, because the signal isn't yet a perfect signal. We still need a triangle, so it's an average, not average, it's an incomplete signal. Therefore, it requires a little bit of experience to manage your emotions if things ends up being different from what you expected, if things has to go a little bit higher. So it requires a little bit of expertise. So beginners, you stay the fuck away. The signal isn't perfect yet, so you wait for more information. So if you're a beginner, I'll say this answer is acceptable, but still you're taking a little bit too much risk for a beginner. And in a beginner's context and perspective, I would say this is interesting, but you just need a little bit more information. If you want to have a look at a lower time frame, I would accept that. That would mean you have a partial signal and you want to have more aggressive entries on a lower time frame. I would say yes. In that perspective, you're going to trade the lower context. All right, the trend channel is in here. Is going to be the lowest time frame's context. So you can definitely go to the lowest time frame. I would definitely agree with that. Do you need to go to the higher time frame? I don't nearly even think that worth anything to answer this. So let's have a look at what you guys gave me as answers. 16% said no, but this is interesting. I just need more information. Pretty good answer to me. 28% have been saying no, it's just noise, there's nothing to do here, and I disagree with that. It is definitely interesting. It is a trend pullback context, and you really want to profit from them, because trend is where you're going to make a lot of money, and if you miss those trends regarding how rare they are, you really don't want to miss them. So when there is a trend, you really need to be able to highlight this and highlight the trading potentials through them. Those who say yes to experienced traders, 13% of you, I agree, totally agree with that, and 20% have said you need to have a look at a lower time frame, which I totally agree. So in a majority of answers, I would say I agree with your answers. All I would say is that the 28% who said just noise, it is not interesting, there's nothing to do here, then you need to have a closer look at informations in the future, because those trend pullbacks, you really want to profit from them and doesn't want to miss them. So I would say yes, but for experienced traders only, or having a look at a shorter time frame for others. All right, we move on to 17, which is doing the same exercise without the prices to see if you're better at identifying signal and trading signals into context and stuff like that without prices, or if prices in here doesn't really alter your judgment. So what do we have in here? Same exercise. We do highlight the interesting information. We've got a price okay. We've got multiple targets in here. So these are cross targets. So targets that need to be interpreted. We need to overview what context they're currently opening into. Are they range breakouts or trend breakouts? All right. We've got a context alert. We've got a red dot, which means normally we should have a momentum okay signal in here, and probably a sine wave okay. I think something has gone wrong with the indicators, but still. So what we have in here is a potential very tradable signal. We've got a momentum signal, which is an overbought cluster. So remember that overbought cluster generally happens as a very interesting signal when you're in a range, but in a trend it's absolutely normal. And as you can see, many fucking overbought clusters, suggesting yes, we probably have to deal with a trend in here. So the question is, Does that makes it interesting kind of trading context or chart? The answer is yes. You definitely have to dig a little deeper in there, but still, let's do it. Step 1, context. Unfolding, 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 unfolding. Oh man, you should really know what the fuck is this. It's an excessive market. Not necessarily a bubble, but still, it's an emotional market. So, beginners, you get the fuck out of here. You don't go any further than that. You cannot even pass step 1 of the strategy. This kind of context, not for you, because these are bearish signals and you definitely don't want to be bearishly trading a bullish trend. Moreover, when it's bubblish and overextended. So we are very late stage trending. Definitely, we can see the breakout has been happening in here. So we're very far from the breakout. We're very late stage excessively trading. So it is not about time to try selling that kind of context unless you're a professional. So is this a kind of trade that a professional will take? Definitely yes. Is this the kind of trade a beginner should get his hands down to? Absolutely fucking not. Experienced trader can try risk in there, but they require a lot of expertise and they need to be managed by a professional who is oversighting the stuff. So if you're an experienced trader, that kind of context, you don't trade it alone. You trade it and make sure that someone else who has better experience than you, a professional, will go along this trade as well. So you make sure that you're not the only one who wants to get there, all right? You don't go alone in that kinds of context. Moreover, you've got a fucking context alert. So any fucking way, this is going to be an aggressive trade, only for experienced traders. So first answer in here, you're a beginner, get the fuck out. Or you have a look at the broader picture. But the actual good answer in here, even for me as an aggressive trader, have a goddamn look at the context. It seems absolutely the best answer in here. So let's answer this. What the fuck do we do with it? It's interesting, but we definitely need to have a broader picture. So we need to have a look at higher time frame to see if this trend still has a lot of room to proceed to go ahead, or if we're pretty much overextended, we're late stage trending, and it's about time to look out for potential reversal of this late stage trend. All right? Question number 18. All right, another interesting stuff, pretty wicked. So, but we don't have a look at that, all right? Don't have a look at the past. First of all, make sure that the reliable short-term informations are interesting. So, same thing, context, rectangle plus a red triangle. We can barely see it. It's I doubt you'll be able to see it, but still, the information is there. So, red triangle, range signal, all right? So, range breakout in here. Divergence, clearly visible, which could be a momentum signal. So in here you don't have the momentum, okay, but there is a visible divergence through prices. Sine wave is barely visible, but I'm going to tell you sine wave is doing this, all right, this, and this. So sine wave is pretty much okay as well. So in here there could be a trade, but still, what the fuck do you do with this? All right, let's say it's interesting, even though I think it's dangerously because you don't have the indicator detecting the signal, so you need to have a visible signal detection. Do you have a context alert? All right, you don't have price okay. All you have is a sine wave target. So it is not the best case scenario in here. It's very freaking risky. In terms of signal quality or intensity, you're very low in here. So only professionals and experienced traders can take a trade out of this. All the others, beginners or just a little bit of experienced trader, you get the fuck out and you look out for better, much better quality signals. Better quality means less risk. And the less experienced you are, the less risk you should take. It's simple as that. See that as a gradient. The more experience you'll get, you'll become, the more aggressive or not perfect signals you'll be able to take. So what do we do in here? I don't nearly even think something is interesting in here. The only good answer will be have a goddamn look at the context, which means have a look at the broader picture as well. In here seems to be the most interesting answer. What did you guys give me? Sorry, question 17. Most of you guys gave me the right answer. Sorry, I forgot about this review. So question 17, you were pretty good at it. You said it's only for professionals, or you have a look at the broader picture. So you definitely done this one right. This one, what did you guys give me? 16% of no, but this is interesting. I just need more information. I don't nearly even think, yes, you could need more information, okay? Let's say the signals quality is pretty low, so you really need to have improved signals in there. So I would accept that answer, even though that's not the most accurate one to me. 23% have been saying I need to have a look at the higher time frame. That's definitely, to me, the most reliable answer to give out here. Some 26% of you, which is just a bit ahead of other answers, said yes, but only for experienced trader. And I absolutely disagree with that. That's not even a trade for experienced trader in here. The signal is pretty low quality. We've got the context alert. Now, it's not enough for an experienced trader. I said experienced trader will look out for better than that. So I would say pass on this or have a look at another time frame. It's probably going to be more suitable, less risky, and definitely better in terms of risk management. Question 19. Oh, what the hell is that? All right, let's do it once again. This question, I really regret this kind of content. Shouldn't have picked such thing. So anyway, context alert, price okay. We've got a cross target in here. It's barely visible, but still, it's there. There is no red triangle so far, so it is just a cross signal. So we're trading at a breakout target, which means that the current price area is of matter. This area is interesting. The latest signal is a bear signal in here. It's pretty lagging, which means the signal is pretty late out of current prices, but still, remember that the red signals must show up into trending context. So, does that look like a trend? I'd say, not really. So, how is the momentum? Pretty hesitating. Do we have an interesting price? Maybe. So I would say in terms of signal quality, it isn't the best case scenario. So once again, beginners, you get the fuck out. You'll find better elsewhere or on another time frame. So you have a context alert, have a look at a broader picture. Simple as that. You'll take less risk and probably better signal quality. But still, for more experienced traders, does that really worth something to do in here? To me, the answer is, even I don't really think I'll do something with it. I don't nearly even think this is really worth any fucking thing. It really looks like an ugly range structure. So let's say it's barely interesting. Let's try to figure out the answers. So we've got first boundary in here, second, third, and we've built the fourth in weird. So it looks like a range who has some kind of underlying trend structure. So these are like bearish trending range, which is pretty weird context. We're already 4 boundaries, so it's a mature bearish range. So what the fuck do we do with it? I would say I'll probably find something more interesting elsewhere. So even I will pass on this one. So what did you guys give me as question 19? My answer in here is, honestly, have a look at the broader picture. All right? Or it's just noise, it's uninteresting, but I don't think there is a trading activity to do in here, at least not in this time frame. So pretty balanced answers you guys gave me. 28% average gave me, that's the most common answer. You need to have a look at the higher time frame, so we agree on this. Some 16% said it is interesting but need more information. I would agree with that. We've got some early signs of an interesting price area, but still no momentum signals or stuff like that. So definitely not enough information to process a trade in here. So waiting for more information, I would say yes. If you absolutely want to trade these assets, it might be trustworthy and worth it, but still not right now. Definitely need more information. Which I'm a little bit more concerned about is that 15% of you have been saying it is not that big. 15% is not a big number, but still 15% thought this was good for experienced trader. And I would say in here the price may be interesting, but you're trading in a context which make it a little bit aggressive to take this time frame. But then there's no momentum signal, so no way. Not even for experienced trader, not even for professionals. All right. So pay attention to this. You rather like to avoid some risky trades or have a look at the broader picture. It's going to be generally it's the most common answer you'll get out of those type of analysis. Most of the time you'll say it's a little bit too aggressive for me, so I'm having a look at the higher time frame. Having a look at the broader picture is just going to narrow the risks for you to get into a too much aggressive trade. Limiting the risk simply brings better chances to get a gain. You really need to understand that, all right? Question number 20, which is the last one. Let's get to this one. What the hell is that? So we do same old stuff, context, but we can see the context line is pretty low. So we're just entering the context area. We still have a little bit of room to go to the downside. We do have a blue triangle plus a sine wave target, which is a cross. We've got a price OK, and we have no momentum signal, but we do have a sine wave into the reversal area. So I would say sine wave is soon to be okay, but we still have no momentum signal. So regarding the cluster of information you have here, does that sound like an interesting trade or an interesting thing to do in here? I would say it is not a good trade. It's not something that the beginners will get down to. But I would say it's starting to ring some bells. It's getting a little bit more interesting. That doesn't mean it will be. All it says is that it could be interesting because we're trading a cluster of information, most likely in terms of prices. We're getting close to context. We've got breakouts, stuff like that. But the problem is this breakout needs to be assessed. Is this a range or a trend breakout? So let's say we go into a deeper analysis in here to get more information. So what do we do in here? Assessing the context. What does it look like? Up, down, up, down. All right, so pretty much a range. So we've got first boundary, second boundary, third, one in here, but a second one in there, all right, with no in-between pullback. So this is the same movement, all right. This one, all right, one in here, but no pullback, a second one, so another one in here, and the one we currently are into, which makes 1, 2, 3, 4, 5, 6, 7 range boundaries. So pretty fucking mature of a range. We don't even know if this isn't even a breakout. It doesn't really look like that because we have no accumulation system going along the way. All right, so we can still forecast this to be a possible range boundary, but still it's a very mature one. So once again, step one, all the beginners, you get the fuck out. Too risky. So what do? You have a context alert. Have a look at the broader picture. You're probably going to have something more interesting to take care of. So have a broader picture. It's always going to be better for beginners. Still, experienced traders, do you want to get your hands in the dirt in here? I would say possibly yes. It is a very mature range. So if we do want to take this trade, I think we need at least a momentum signal. So is the price interesting in a range? No. No, it isn't. We're trading close to a target, but normally you're supposed to trade below context. Remember, you're supposed to trade there. So you would wait for slightly better prices in here if you were an experienced trader looking at trading this stuff. You would eventually look out for another dip slightly below context with another blue arrow and possibly an exit signal or something like that, or a divergence, something that will limit the risk for price to keep on going to the downside, because we've got a pretty fucking mature range and this could just be another breakout, and you would be trading bullish in a breaking down market, and that's the worst case scenario if you end up doing this. So limit the risk. In here I would say for those who want to take the trade, must not be beginners. So experienced traders, I would say okay, but still, even if you're experienced, there's not enough information for you to take a trade. So all the actual good answers in here are if you're experienced and you can think this is interesting, but you need more information because the risk limitation is still not enough to trigger a trade. Otherwise, if you're a beginner, I think the right answer is have a look at the higher time frame. Right? If you're a professional, I would say still, this is a very freaking dangerous stuff to come across. So even I wouldn't even take a trade because there's not enough information to limit my risk. I myself just need more information. As a professional, right? As an experienced trader, more information is needed as well. As a beginner, have a look at the higher time frame are definitely the most reliable answers. What are the answers you guys gave me? Most of you just said that. 20% answered you need more information, and I totally agree with that. Another 22% have been saying have a look at the higher time frame, so definitely half of you guys have been giving the best answers in here. Another 14% said no, it's just noise, and I would totally agree with that. I mean, 7 fucking range boundaries, that's pretty much noisy, so I would definitely agree with that answer as well. Just 14% said yes, it's a low risk trade for everyone, and I don't agree with them. Those who gave these 15% answers, you really don't want to give this answer all over again in such kind of context. The range is pretty fucking mature, so beginners don't take trades in those contexts. All right? So to sum up the core informations in here, I ask you finally for your feedback, asking you how difficult you thought this was. You clearly, massively, 74% of you said high, but challenge is good. So I definitely agree with this. You were just 9% saying too high, I'm lost, and that's definitely normal that some of you guys may feel a little bit lost with it. I remind you that this is complicated, this is a job that takes years to process, so obviously if you just got your hands in there, it is absolutely normal that you feel a little bit lost. So just work a little bit harder, be patient, don't blame yourself, it's absolutely normal, time will do the job. Others just said normal, just as expected. So thank you guys for participating. I also took a good consideration of your feedback. Most of the things you said is that actually the quality of the images are pretty fucking low, and I need to work this out. So don't worry, the next time I'll take care of this. This one was just the first one to kind of having a glimpse of how it works and stuff like that. So it was really a test. So don't blame me for this. Next one is going to be obviously better. Some of you guys have also gave me some feedback about the fact that you were lacking the possibility to access your previous answers to kind of review what you said back in the days. So normally in Discord I already shared an Excel file in which you have all the results you've been giving question by question. You should find it into Discord, or otherwise you just ask a moderator and it's just going to be able to point you down to the answer in here. Obviously if you gave wrong answers, I don't blame you and don't blame you as well. It's absolutely normal, and it's most likely when you do mistakes then you learn stuffs. So you rather like to make more mistakes than having good answers in here. It means you're going to learn faster. All that's important in here is that when you make clear and clean mistakes, you don't want to make them the next time you come across some similar context. So the goal is to make the mistakes during those tests and MCQ tests so you can make sure that in real market conditions, if you ever lived this already in the past, then you're not going to make the mistake this time on real conditions. So anyway, the next one is going to be early June. I'll try to do anything I can to make it in time. This one will probably just be 10 to 12 questions, no 20. 20 was a little bit too much and it's way too long for the correction afterwards. So the next one is going to be pretty much the same level of difficulty, just less question, still the same stuff. Those who will get 100% good answers, I don't expect many of you guys to be able to clearly answer all those good questions, but still I think a few of you guys, the more experienced ones, will probably get the right answers. And that's the goal. Once again, you participate, you do good job, so you get free tools. As simple as that. I've been clear with that. I think that's the most fair approach we could have in here. You do a good job, you work hard, I give you fucking free tools. And I think that you actually deserve it. So I'm curious to see how many of you guys will give 100% good answers on the next test. I hope some people will be able to. And I'll adjust the level of difficulty. I mean, if 50 persons give 100% good answers, I'll definitely rise the level the next time. If just less than 10 people get right answers, I'll probably decrease a little bit or maintain the same level of difficulty, as you guys should be able to progress step after step. All right, so I definitely want some people to get free tools. I don't want these to be over difficult so no one makes it. That's not the goal. All right. So we'll see. I'm pretty curious to see how the next time will play. The only stuff I would say to terminate this is that regarding the number of answers I got, I would pretty much expect more of you guys to participate the next time. I haven't been sending emails to you to don't bother you with stupid emails to remember this stuff. But still, all right, there are far less answers and people who participate than actual users of the tool. So I would at least expect that everyone who's using the tool to participate. Moreover, you can get fucking free tools. So if you rather like to pay and not learning anything, I don't really get it. It's free for you to participate. Even if you don't have the tools, I'll give you them for free. So you get good answers. Even if you don't use the tools, you get a free month. So if you ever wanted to get your hands on the tools for free, then you can try it out. This test is open to everyone. All right? And anyway, even if you don't use the tool, remember the strategy is more like teaching you the actual right behavior to have in face of markets, to avoid gut trading, to have rational pricing, decision making, and stuff like that. So anyway, using the indicators or not, the process that is done to get to an actual trading decision is definitely what every professional does in the markets. Every professional does that. We may use different words, we may use different techniques, different tools, different indicators or stuff like that. We all do the fucking same stuff, all right? So there is no 100 ways or a billion ways to get to trading. There are multiple ways, there are multiple strategies, but these strategies, main goals, main rules, major steps, every fucking professional trader has the same. So anyway, even if you don't want to use my tools, you're at least going to learn, practically speaking, how a professional gets to analyze a market. And it's pretty fucking different from trading in news because you think the market is going to go down or up, or trading because others might be wanting to buy this stuff, like all the Bitcoin traders or stuff like that, who just buy because they think the market will go up. What the fuck are you trading? I mean, you don't trade because you think of something. You trade because you might think of something. Yes, that's good to have to have an opinion on the market you trade. It's good, but still, you fucking trade a signal, and you need to be happening, and this signal needs to happen in context, and need to make sure that you have price filtered first. So definitely, that's how it goes. All right. Anyway, that's 1 hour long. I still have a stuff in nose, and I'm going to stuff in here. I hope you guys have been learning quite some stuff. If you want to give me some reviews, you can comment on this show, on these things. If you got suggestions as well, don't hesitate. Thank you for those who participated. I hope you'll be more the next time. See you guys later.